Hi, everyone. Welcome back to Mike's Minutes. My name is Mike Dunn, a wealth advisor with IPC Securities. Thanks for joining me today. And as always, this information presented is strictly for educational purposes and not advice, as everybody's situation is different. I hope everybody has had a great winter. I don't think we're out of the woods yet, but it's looking a little better outside. Clearly, I haven't had a haircut yet, so hopefully in my next video, I'll have some nicer hair, I guess. So, I hope everybody's doing well. And today, my topic is on mutual funds. I want to help you understand what they are and who they make sense for. I use a lot of mutual funds in my business because they do make sense for a lot of my clients. I think there is a bad connotation wrapped around the term mutual fund, but I truly believe they are a great investment vehicle for many investors. This video is not to try to persuade you into this type of investment, but when you hear this information, you might have a whole different perspective on them. Maybe you don't, and if you don't, that's fine. So let's get right into it. What is a mutual fund? A mutual fund is a pool of money by investors to purchase a basket of securities. There's a basket of securities, and investors buy units of the basket, therefore owning a well-diversified portfolio. The securities could be stocks, bonds, cash, even real estate, and they're managed by a portfolio manager. This manager decides what goes into the basket depending on the type of mutual fund it is. So, for example, if this is a Canadian equity mutual fund, the manager and their team decide what Canadian stocks will go into the basket. There's extensive research done on the underlying securities that go into the portfolio. So investors pay for this research and expertise that they're getting when they invest in that particular mutual fund. Having investors pool their money allows access to the basket of securities for pretty much anyone. Think of a team. Let's say there's 3 or 4 people on a team and they're strictly managing Canadian equity. All they do is research Canadian equity stocks. So somebody might be in charge of financials, somebody might be in charge of energy. There is a lot of research and expertise that go into the stock picking for the mutual fund. This is why a big reason why mutual funds are more expensive than an ETF. I'll do a video on ETFs or individual stocks. You're getting professional management and you have to pay for that. So, diversification and efficiency are probably two of the most important components when it comes to investing. And mutual funds definitely satisfy both. The saying, don't put all your eggs in one basket, it works very well here. Unless you have a larger amount of money, it is impossible to build a well diversified portfolio using individual stocks. Stocks also have trade costs. So if you're spending money on trading, less is more. If you could buy a well diversified portfolio based on your risk in one transaction, wouldn't that be attractive to you? The main reason is probably that they are more expensive. Yes, mutual funds do have higher costs, but what do you get? We live in a world where, cost is an issue in the absence of value. So, what value are you getting by paying more for your investment? Well, you're getting professional management, a consistent, very consistent buy sell process, diversification, risk mitigation, and you're getting simplicity. If none of these factors are important, then hey, maybe a mutual fund is not for you. If you ask your friends, sisters, dog walkers, what their stock picking strategy is, like what's their buy strategy, what's their sell strategy, chances are they don't. There's no discipline. And sometimes when you pay a little bit more for an investment, you're buying a disciplined approach to what you're trying to accomplish. So in today's world, everyone seems to be a stock trader. The amount of times I've been asked, which stock should I buy? Or, my friend told me I should buy this. What do you think? It's been worse than ever. Maybe it's because it's of the pandemic where we have more screen time. Maybe it's the Reddit hype or whatever it is. This is not sustainable. Money is hard to make, and I value every single dollar that I have. And I do the exact same for my clients. I get it. Risk reward is great if it works out, but there are a lot that don't, and nobody, and I mean nobody, talks about their losses. You're not going to read an article on Reddit or on Facebook or anything about somebody that invested in some stock and they lost money, and you just don't hear that. You only hear of success stories. Therefore, it creates this euphoria around stock trading, and everybody thinks it's easy to make money. So the last point that I want to make about mutual funds are that they are easy to contribute on an ongoing basis. Think about this. You set up a monthly contribution to your RSP or TFSA account. You want to buy individual stocks. You would have to go into the account every month and buy the stock or stocks that you want at that time. This is very time consuming and not efficient. For a lot of my clients that are contributing to their accounts regularly, we automate contributions and they're automatically invested into their funds. Less can definitely be more when it comes to investing. And I think the KISS acronym works very well in this situation. When you automate things, there's less of a chance of trying to time the market, which could pose many risks to your overall strategy. So let's say somebody contributes money to their RSP or TFSA. They make a note in their calendar, whatever it is, to go in. Okay, I see the money. And then, they might look at the macro environment. Maybe the market's up that day, so they decide not to. And then the next day, maybe they forget, and then life gets busy. There's just, less is more, like I said. And when you can automate things, you're buying at all different kinds of, market situations. The term is called dollar cost averaging, and I'll definitely do a video on that at some point. But think about a year ago from now. March was a horrific month, or the latter part of March for the markets. If you were automating things, maybe you do it every week, every 2 weeks, you were buying your investment. If you own quality stuff in a time like last year, you just have to be patient because things aren't always going to stay down. Skip forward a year from now, I'm sure everybody that stayed the course is happy they did. So, as I mentioned before, mutual funds make sense for a lot of situations. And before you decide this is not for you, make sure you understand all options along with their pros and cons. There are many different vehicles to invest in and make money over time, but we live in an era where we want immediate results and huge returns with no risk. Hey, if anybody watching this video knows where we can do that, please tell me, because we will have a huge business if that's the case. This might happen the odd time. Somebody might get lucky, a handful of people might get lucky, but a lot of what's going on right now is not a sustainable investment strategy. So my question is, why try to reinvent the wheel? Long-term, consistent, properly managed asset allocation and risk management have been proven to be successful over and over and over again. Rome wasn't built in a day, and neither was net worth. A huge benefit to working with an advisor is to have someone keep you on track and help you avoid making irrational, spur-of-the-moment decisions that could impact your long-term goals. So lastly, I want to end with this. Before you invest, think about what you're trying to accomplish. If it is make as much money as possible, it will be very difficult to be happy. No return will be satisfying. Weigh the options that are available to help you accomplish your goals and decide which one is best for you. Mutual funds are one way to invest, and over time, I will have more videos on different investment vehicles. I always say if you have questions, please reach out to me. Again, this is not a mutual fund promotional video, just for educational purposes. I personally buy mutual funds for myself, and a lot of them, I do research on which ones I buy. A lot of them do well over time. You just have to stick to a strategy and make sure you own quality things. If you have any questions, like I said, about today's video, please reach out. I'd be more than happy to answer any of them that you might have. Also, if you haven't subscribed to my channel, please do so, so you can be updated on new content. And as always, thank you very much for joining me on this mutual fund episode of Mike's Minutes. And hopefully you did learn something that you didn't know prior to this video. Stay tuned for more financial topics. And until next time, stay safe, stay healthy, and stay invested. Take care, everyone, and have a great day.